Hey traders, I want to tell you about another great trade that I got to do today using the Quant Pivots on SPX. This one was extra exciting because I was only in the trade for 3.5 minutes. In fact, it was the last 3.5 minutes of the cash session. And because it was on SPX, I was able to let it cash settle and collect the entire amount of the credit that I received. So let me tell you what I'm talking about. So right over here, I'm showing you a weekly chart on SPX. So each one of these candlesticks represents 1 week. This is the week that we're in right now, just started today. And then these quant pivots are the monthly quant pivots. Now, this is when I get excited when we're nearing the end of a time frame on a given quant pivot. So today's the last day of the month. So this is the last day that these levels will be valid for June. So here's where it got interesting. So if we look at this H2 on the monthly quant pivots, it lined up at 62.06. And you can see that we came right up to it. In fact, we even got above it. We actually got up to 62.15. Now let me show you, I'm going to mark here on my screen so that you know what I'm looking at. If we look at the monthly periods analyzed, we're looking at 46 months, or at least the quant pivot data is. And in that time period, in the last 46 months, price has only touched the H2 6% or 13% of the time, and it's only actually closed above it 6.5% of the time. So what does that mean? Well, that means that 93.5% of the time, price will close below the H2. So even though we got above that level, the chances were pretty good that we would close below it, that we would close below 62.06 today. So here's what I did. In the last 10 minutes of the day, I started looking at price on a smaller time frame, which I will show you right here. I'm going to switch over to a 5-minute just so that you can see what I was looking at on a very small time frame. So you can see that we got up to 62.15 in the last 5 minutes of the day, though. Look at what happened. We got it right here. And so that's when I decided to sell a credit spread. I sold the 62.05 calls, and then I bought the 62.10 calls against it just to limit my risk. I only did one of those, and I received $350 in credit, which meant that my max risk was $150. Because this was in the last 3.5 minutes of the day, though, I was willing to risk the entire thing. It's a small risk for a pretty high reward, right? All that would need to happen in order for me to keep that entire credit that I received of $350 is that price would have needed to close below that short strike of 62.05. And look at where it closed. It ended up closing right at 62.04 and 95. So by 5 pennies, I was able to collect the entire credit that I received, put on the trade in the last 3.5 minutes of the day. So that was a pretty easy win. Like I said, I was willing to risk the entire 150 on that trade, knowing that I wouldn't be in it very long, and most importantly, knowing that the odds were pretty good that price would drop to my level. Sure enough, it did. So one more reason to love the quant pivots. I've said it before, I use them every day, not always in this way. In fact, this was pretty rare. For price to come up to a monthly H2 level, that doesn't happen very often. So I saw the opportunity and I seized it. But usually I use the quant pivots on smaller time frames, 2-hour and 4-hour for intraday reversals. If you don't have them yet, I highly suggest you check them out. You can get them at simplertrading.com. I will post that link down below in the caption. And I encourage you to try them out and see if they can fit your trading style as well. Happy trading, everyone.